Morning, everybody. It is October 25th, 2023, 8:45 a.m. We are here and live for another episode of the Market Open. This week, we've got an earnings bonanza of some of the biggest, most innovative companies in the world, and two of them ended up reporting yesterday. Microsoft reported, Google reported. So we've got a lot to talk about in terms of what's going on with Microsoft and Google. Some mixed results, some okay, some not the best. Maybe a dip worth buying, maybe a premium that's going to be sold off based on what we see on today's Market Open. PayPal is at another new 52-week low. PayPal down 2.5% on some news around what's going on in the fintech space. Another 2.5 has started to seem very normal for how PayPal is operating, but PayPal continuing to get hammered. And then on top of that, we have some more earnings from different companies that we have to talk about as well. PayPal is $2.80 away from touching below 50. So it's going to be really interesting to kind of see how this plays out, where this goes from here, and how a lot of these companies end up working with earnings. And then on top of that, today, I believe, we have another set of earnings from a big tech company, which is going to be Meta. So we're going to talk about what's going on with Meta. Amazon's going to be up tomorrow. Meta is going to be today after the bell. So we got a lot to talk about. Let's get into it. Aurelio, thank you for being here. Tobor, Midwest, ears on. The wife is lurking. This is your special time with me. John Schwartzbeck, thank you for being here. Michael, Broccoli Bob, Carter Deli. Let's get this party started. Happy hump day. Happy hump day indeed. Missy Iger, Mr. Seymour Duck, Monty, Andy, Jude, Roosevelt, Sethi Roth, Felicia, Sam, Kane Frost. All right. Thank you all for being here. Nolan, DRK. Let's get started and let's start discussing what's going on in the world of markets. I think, well, actually, let's do a little bit of macro real quick, and then we'll get into Google and see kind of how Google played out yesterday. So, U.S. 10-year is down. U.S. 10-year, it's up a little bit, but it's down from a couple of days ago. 4.88%, obviously touching that 4.9 a lot more closely than we would like it to be touching. If you round up, it is going to be 4.9%, 4.878 right now. It is down from being at 4.978 and down from 5.0, which is good. Another reason why equities are having a little bit of room to at least maybe capitulate. What's really interesting today, the thing that I thought that was pretty fun to see, is that this bad boy is starting to come down. Oil. In the past 5 days, oil is down 3%, about 2.98%, which is not bad to see. Rising sanctions with Russia on crude oil a couple of weeks ago is what I believe was the major catalyst to get oil to come up. And then obviously what's going on in Israel also caused some geopolitical instability, which kind of led people to think maybe oil should be more expensive than it is not if we have some supply chain bottlenecks. A lot of those concerns are starting to be resolved, even though one could argue those concerns will rise up again. But we're seeing a little bit of relief there, which is why we're seeing oil come down. This is really important. I mean, look, it's October 25th for the vast majority of October, if you look at it here. So in October 1 to 2, we had $90. Then for about 10 days, we were stuck at this 84, 85. And then for the last, 13 days, 14 days, so 2 weeks, we've been stuck at 90 to 89. So the CPI energy index probably going to be for the month of October likely a little, either the same, maybe a little lower than what it was in September, but not that aggressively lower. If we were at 84, 83 for the majority of the month, maybe we would see a more dramatic decline. But right now we're at 88, down from 90, even though we were at 90 most of the month. So we got about 6 days left in the month of October. We'll see how it plays out. Oil is coming down. That is good for equities. And that 10-year starting to come down, which is also good for equities as well. In terms of the pre-market, what do we have going on? PayPal's at 52.82, S&P 500 down just a little bit, 422. Palantir, 1651, down about 1% or 0.78%. We have to talk about Snapchat. They're actually up in the pre-market. They had earnings yesterday. Spotify, 169 down a little bit. KRE, Regional Banking Index, is down. Enphase continuing to get hammered in the pre-market today, down about 0.45%. And then Google is down 6%. Microsoft's up 4%. So we're going to talk about why Google and Microsoft are down and ultimately what's happening to those companies. Amit, are you adding spreads to your Google? If it gets low enough, yes. So I would like to see, and I think it will, because this is kind of the price where I started buying those spreads. So we will see. I mean, let's get into it. Let's talk about Google right now. I am very curious to see how the market's going to react to the numbers that Google put up. I think the numbers, honestly, were not bad at all. If you look at the numbers were pretty damn phenomenal. They missed on one key metric. And so that response from the market is going to determine if I have even the opportunity to add, but I would like to add if it goes below my average. So here's the top headline numbers. Earnings per share, they beat by 10 cents. They made $1.55 per share. Revenue, $76 billion, a billion more than what the street expected, which is, not bad to beat by $1 billion when you're a company that's as big as Google. YouTube ad revenue, $7.95 billion. YouTube is just killing it. I would probably imagine YouTube's going to get to like a $10 billion run rate within the next 4 or 5 years. I mean, Netflix put up $8.5 billion for context. So YouTube basically did as much as Netflix did in the quarter, and they have to pay zero for content on YouTube. They pay for obviously creator advertisements, but YouTube pays nothing for content. Netflix pays like I think $15 billion a year or $20 billion a year for content. This is just insane. I mean, this is absolutely insane to see that. And that's every quarter. So basically by the end of the year, they're at $30 billion just off YouTube. Google Cloud revenue, this was the bad one, $8.41 billion versus $8.64. So Google Cloud is now growing 22% year over year versus 28% from last quarter. I mean, 22 from 28, 6% decline is pretty bad when you're operating at Google scale. They missed by $20 million. But to miss by $20 million and for investors to be that upset, I think, the main reason is investors are looking towards the future. Are you really going to fall behind Amazon and Microsoft? Now, remember, Azure, we'll talk about them in a second. They had 4 quarters of consecutive non-growth for Azure Cloud. And then this quarter, it spiked by 27%. And they finally got the street excited because they spiked up their cloud revenues. Google might be in the same situation in terms of it had a good couple quarters. Now it's having a bad quarter. Until they have a good quarter that goes up again, it's going to be a little tough to see the market get excited for them. Cloud revenue came in below estimates at $8.41 billion, missing the mark by $20 million. Their cloud unit has been an area of investment as the company tries to catch AWS and Azure. The business is becoming more important even with the emergence of general artificial intelligence because more companies are turning to the public cloud to run heavy workloads. Now, what did Sundar Pichai say about this on the earnings call? Really, he didn't care too much. He said, look, we were really pleased with what happened in cloud. We're going to keep going. We're going to keep doing what we need to do to make cloud better and more effective. But he said that cloud was fine and we didn't see any real issues. So to me, to miss by 20 million, as Lussy Picker says in the chat, I love the name, I think it's algos that sold because of cloud rev. Google already climbs up slowly again. Yeah, which is why I think I don't even know if my dip is going to last forever or this dip is going to last forever. But I do think a lot of the algorithms just saw a miss and they sold it off because it's a very big company. And when you miss on something, that's one of the key components of the algorithm. Then it goes bad. Like the algorithm that trades Google is probably, hard coded to be like cloud, YouTube, search, right? And if any of those three, there's a negative there, then sell it off because you don't even want to think of what would happen in terms of the response to the stock. And so as a result of that, 11% growth for Q3 2023, $76 billion is just unheard of to imagine they're doing that. $20 million miss on cloud. We know cloud is growing. We know AI is growing. They talked about their AI TPUs on cloud. It doesn't seem like it's enough of a scary thing in the context of what's going on with Google and how the reaction is. Let's actually get an update and see how some other people think about Google as well.
Microsoft reported earnings after the bell yesterday. Both companies reported better than expected earnings and revenue. But Google's cloud revenue missed expectations. And as a result, that stock is down by about 6.8%. Joining us right now is Paul Meeks. He's a veteran tech investor and professor at the Baker School of Business at the Citadel in Charleston. And Paul, let's dig through these numbers. If you were just looking at the quick read on the earnings report on this, you would have said, okay, great news. They came in with earnings and revenue above expectations. What happened with Alphabet? What's the big disappointment?
Well, you hit the nail on the head. They were expected to deliver $8.6 billion in Google Cloud revenue, and they came in with $8.4 billion. Now, they don't give guidance. So this was a Wall Street estimate calculated by Wall Street. The $8.4 billion is still 22% growth. And even though Microsoft, with its cloud business, Azure, grew 29%, so they gained some share, it's still pretty robust growth by Google. And I actually think that the reaction today, down 7% on a miss that was about $20 million on an over $8 billion number, is a gross overreaction.
I would agree. And so that's why I'm kind of like, I don't know if this dip is going to last because I think the market's going to realize it's an overreaction, but the market might say, hey, you're Google, you deserve to miss 7% if you lose on some of these key metrics, and maybe that's a juicy dip to buy.
I think Alphabet's a pretty compelling buy right now today.
Okay, that's a strong move on this. If you want to dig through the rest of what was happening there, you probably liked a lot of what you saw when it came to advertising and some of the other areas where they've operated pretty well. What did you think digging through the rest of the numbers for Alphabet?
So digging through the rest of the numbers, and I was on the quarterly webcast live, everything looked pretty good. And of course, this company, until further notice, is going to be driven by the digital ad market. And that accelerated in all kind of sub-segments within that. And so I'm pretty pleased. Joe said the right thing at the beginning of the segment, that nothing looks good, including Google, other tech stocks, and maybe even generally other stocks in overall, technicals look pretty poor. So do you rush in and buy Google aggressively? I'd actually buy it. Today, the stock's going to break through its 50-day moving average, which is 134. We'll open at 129. I think that you buy a little bit and maybe scale into Alphabet in that range of 125 to 115, more for technical reasons, not because we've had a poor inflection in fundamentals with that cloud business. I think they're going to be just fine over time. I don't think this is really that relevant.
Let's talk a little more about the technical issues. What concerns you? Where do you think we're headed?
Yeah, unfortunately, we've had a nasty breakthrough to the 50-day moving average, and it'll be on some pretty high volume this morning. So that looks pretty bad. We've been in this range above the 50-day support ever since very early 2023. And so, yes, that's why I suggest maybe you buy a tidbit based on what I think is an overreaction to the Google Cloud revenue miss, but scale in over time, because we could go lower. We could go down to 125, maybe.
Okay, in a second, we're going to get a preview of the bear case of this. So the bull case, the guy's like, look, cloud is a $20 million miss. Company's overall performing well. This is a dip that you want to buy. We're going to get the bear case on why the cloud growth rate was very disappointing in a second. But I do want to highlight what he's saying here. Apple right now, or not Apple, Google at 131.88 in the pre-market. It's recovering a little bit from where it ended yesterday at 129. So it is hitting that 50-day moving average. It's going to be very interesting. $1.77 trillion market cap. What does the market consider of Google? Because here's the other thing that's important. They did mention, I believe Snapchat mentioned, that advertising in Q4 is starting to slow down a little bit in the context of not literal spend, but how advertisers are thinking of allocating that capital into different sources. And as a result of that, that might likely be something of a concern for Meta tonight. Advertising really wasn't a concern for Google in terms of their numbers, but you could argue there's going to be a little bit of a headwind for Meta. Google, again, the decline has been on cloud. We'll do Meta preview in a little bit. Meta is expecting about $33 billion in revenue. It's at 310 right now, down 0.71%. Meta has not been affected in the pre-market because of Google, even though they both correlate and trade the same a lot of times, because this is a cloud miss. If Google starts to decline pretty dramatically, we may see some impact on Meta as well, simply because the market's like, you know what? If we don't want to buy Google, we're probably not going to find a lot of love in Meta. And so we got to find some other place to keep going from there. Now, the other thing that's really important to understand is Google might be one of the best spaces to hide in 2024 in regards to earnings and where you want to be, because if interest rates are high, it doesn't really affect Google, right? This cloud revenue thing is not something from interest rates. And if interest rates go lower, it's only beneficial for Google, because then companies have more money to be able to allocate to things like advertising, because they can borrow at cheaper rates. So it seems like Google is in a great position, but that 50-day moving average and that cloud miss is not keeping investors happy on today, which might be an opportunity for a dip. They also own 10% of SpaceX. I forgot about that. They also own 10% of SpaceX. Let me put up the reason for why cloud might be a bear case for Google. Here's why the 22% growth rate is actually very disappointing.
And Alphabet reporting third quarter earnings just moments ago. You can see the opposite reaction in those stocks right now. Joining us to break it down is CFRA Research Senior Equity Analyst Angelo Zeno and Griffin Asset Management Portfolio Manager Doug Famigletti. Doug holds a large position in Microsoft and a small one in Alphabet and joins us for the first time here. So welcome to you, Doug. I will start with you, Doug. As an investor in these companies, what you think of the results that we've gotten so far?
Well, I mean, I think the Microsoft results were great. I mean, the Azure revenue growth, I mean, I think that, the estimates were more in the 26% range and coming in at 29%. So that's positive. It's no surprise to me that the stocks are moving the way that they are. Both are up a lot year to date. Alphabet up quite a bit more, 57, 58%. So coming in with a lot of expectations. I think both of them are pretty reasonably priced given their long-term growth. But I think the cloud business for Alphabet was a little disappointing. And given the fact that it's a much smaller percentage of their total revenue versus Microsoft, which is 22% of their revenues is Azure, whereas with Alphabet, it's more like 13, 14%. So I think growth there being disappointing on a relative basis is probably what's hitting the stock right now.
Okay. Angelo, do you see it the same way? Is that why we're seeing both of these names move in opposite directions, especially when you see Microsoft Azure up 29% and representing a re-acceleration of that business?
Yeah, no, I would completely agree with all of that. I mean, you kind of look at the numbers here. I mean, the 22% growth rate in terms of, Alphabet's cloud business is definitely a big disappointment, a deceleration from the 28% growth rate we saw in both Q1 and Q2 of this year. And, completely different than what we're seeing right now on the Microsoft side of things, which is that now finally starting to see an acceleration on the cloud side of things. I will say, as far as Alphabet is concerned, the positive here is the digital ad spend landscape is looking a lot healthier than I think most anticipated out there. You're looking at search growth of about 11%. You're looking at YouTube growth at 12%. So as far as the digital ad spend landscape, that does bode well also for Meta going into tomorrow night's results. And as we kind of go into 2024, there are still catalysts as far as the digital ad landscape is.
So we'll talk about Meta in a second, but as you can see, digital ads, there's not really any problem there in regards to how Google is operating. The biggest problem, as they said, was cloud. Given Microsoft grew 27%, Google declined in terms of growth from 28 to 22, and that was tough. Micro says, I think Google can lose a lot of market share on search result side, on mobile devices and data center as well. I kind of disagree with this. I disagree with this a lot. I was of the the mindset back in March. And I think a lot of us were that ChatGPT was going to eat Google's lunch. I mean, to say that none of us thought ChatGPT would eat a little bit of their lunch is probably a lie, right? All of us thought, man, Google is going to be affected by this. I think Google has not been affected even 1% by ChatGPT. And we see it in the numbers. That's not me just like hypothesizing that. Their search advertising is not only growing, it is it's stable from before ChatGPT and it's growing from after ChatGPT. And the reason for this, I think, is a couple of things. Number one, they released Bard. So they've got you locked into that Bard ecosystem. I know a lot of people that are using Bard over ChatGPT. It has real-time data. I use Bard sometimes when I need to search for something and get actual results versus using something like ChatGPT that's updated last of January 2022. Number two, Google has generative AI search. If you've been in the beta for that, and I don't even think it's beta anymore, I think it's rolled out to everybody. If you search for something, there will be like a little loading bar as soon as you search before they give you the links, and it'll give you the answer. And so from that perspective, you kind of don't really always need to go to ChatGPT, because the reason I went to ChatGPT back in March is to get the answer. Now Google gives you the answer. And as a result of just getting the answer immediately, that is also something that's keeping people enthralled into Google. And then the final thing that's really important, the thing none of us considered, all of us being super technical around, ChatGPT, most people don't know ChatGPT exists. Like your mom doesn't really know that there's a thing called ChatGPT, right? And if she did, why would she really care? Right? Like most people, we go to Google, it's the default browser on Safari, on our iPhones, on your Android. You click it, you search, boom, you're good to go. Very few people are using ChatGPT on their phones, right? It's usually when you're on your desktop, you're starting to do work. I mean, I know there are phone users, but when you need to find something immediately, it's Google. And then on top of that, you've got YouTube also affecting Google. So as a result of that, I am not worried in the slightest around search advertising, traffic, or Google's ability to retain the attention of the consumer and continue to grow that attention. Cloud was the thing that was disappointing, but even that cloud I'm not worried about because it was a $20 million miss. It's like a rounding error, right? The market wanted 8.6. They brought in 8.4. These arbitrary numbers the market created because Google doesn't put out any fourth quarter results or guidance in the future. So the market just came up with 8.64. And then it's down 7%. It's going to be down hundreds of billions as the market opens, or not hundreds of billions, but tens of billions of dollars in market cap. And that might just be a dip because the market's being kind of, here. Erwin says mobile GPT is awful. Yeah, it's not a Google search is a monster and it's not going away. And I mistakenly thought in March it was really going to be eaten because the argument was like, why do you need advertising if you can just get the answer immediately? but it's just not that many people want the answer immediately. We just want the answer, which means we don't need like this artificial intelligence result. We just need to go to the thing that gets us the answer, and Google is the default thing for 88 billion visits every single month. I like ChatGPT UI better, but I think Bard is better performance-wise. Yeah, like if you're looking for earnings results on a company, Bard will actually give you the answer, even though it does hallucinate a lot, and they got to fix that. But ChatGPT can't even give some of those, broader answers at scale. I think you are underestimating Microsoft and ChatGPT. Look, we'll see. The numbers that we got from Google's earnings are showing that I am not underestimating search. Search is not. I mean, let me just pull up the numbers, because we gotta. It's a good discussion to have, and it'll bring in some of the Microsoft stuff. But it's doing well. Father Links, do you or anyone else from Finance Junkies ever consider sharing the portfolio overview, or is this too private? Thank you for the super chat. I've shared my portfolio. It's public. I'll say the 6 stocks: TFC, Truist Bank, Robinhood, SoFi, Palantir, PayPal, and then Google. Those are the 6 companies that I'm in. If you want Chris's portfolio, it's on his Patreon, but I think it's like $5-10 a month. But he's pretty public on his major positions, if that's all you care about, which is like Verizon, Google, TFC. Those are kind of his core. I think he's still in Disney. He has a bit of PayPal stuff he's mainly in. So let me pull up this search advertising stuff, because I think this is interesting to see. So let's go to this here. Again, maybe I'm naive, but I do not think Microsoft at all is eating Google's lunch in regard. And I don't even think they talked about ChatGPT that broadly on the earnings call. Their main talking points were about cloud. Okay, here we go. So this is what we got. This was Google's full year 2023 income statement. All right. So 76.7 billion, up 11% year over year. Ad revenue was 59.6 billion, up 9% year over year. Like, do you know how hard it is to grow a number 9% when you were already in the tens of billions? Like, that's just insane that we're living in a time where all of us are interacting with a company that's able to actually grow like this. It is, and the fact that we can buy and invest in them, it's just actually insane. And then you go to search advertising. So this is excluding all the other parts of their revenue, 44 billion. Microsoft Bing barely gets 1 billion traffic visitors a month. Google gets 88 times that at 88 billion. And that's up 11% year over year. So again, ChatGPT is at about 8 months now to really bite into Google's market share. And so far it hasn't. Maybe it does in the future, but so far it has not done that. Gross profit was 43 billion. I mean, like, this is just insane. Like 43, this is just absolutely insane. Operating profit was 21 billion. Their net profit, what they took home, what they actually brought in the bank, $20 billion, 19.7 billion. Just insane. YouTube, 8 billion. Google AdMob, 7 billion. Google Play, 8.3 billion. Google Cloud, 8.4 billion. And then they made 300 million off some other stuff. So when you look at something like that, it's just hard to imagine ChatGPT is gonna kill on their lunch. Google hasn't even launched the real Bard. ChatGPT will be very irrelevant very fast. Also, everyone is forgetting that Apple has been testing for almost 10 years on Siri and the habits of voice. Yeah, I agree. I told Siri yesterday, hey, Siri, turn off autocorrect. And I was surprised. It was like, I'm not allowed to do that for you. I was just like, what? This is like, you've been around for, I remember when Siri came out in 2014, 2010, whatever it was. I was so excited when Siri came out. I remember playing with it on the iPhone 4. Like, I was like, this is the future. I was, as a tech enthusiast, I was like, this is amazing. And 10 years later, I'm like, hey, Siri, can you turn off autocorrect? And she's like, oh, I'm not allowed to access the settings of your iPhone to turn off autocorrect. And I'm just like, are we, is this actually happening right now? Is this like really, like, is this Apple's really doing this? It's just insane. And so Google, with the Google Pixel 8 now incorporating voice into AI and Bard on the phone, you could ask it for anything and it gives you an answer. The opportunity for Google here is just like massive in my opinion. But today will be a dip because that cloud revenue came in lower. And maybe that's a dip that the longs have actually been waiting for as well. Okay, let's talk about Microsoft because we talked a lot about Google. Let's see a little bit on how Microsoft did today as well. Thank you all for being here. We've got market open in about 20 minutes. We've got to discuss Meta preview today and a bunch of other headlines and what UA auto worker strike that's going on as well and some updates we're seeing there. So let's pull up Microsoft earnings and then get some analysis on that. Microsoft had a pretty good quarter. Earnings per share were $2.99 versus $3.55. So they beat on those earnings per share expectations pretty well, which is why the stock popped about 5%. It's up 4.74% in the pre-market today. Revenue of $56.52 billion versus $54 billion. This is good. Last quarter, they missed on revenue, so they beat it by about $1.2 billion this quarter, which is something the street really needed from them. With respect to guidance, Amy Hood, their CFO, called for fiscal second quarter revenue in the range of 60 to 61 billion. So they expect $4 billion even more of growth next quarter. That implies a 50% year-over-year growth, or sorry, 15%. Analysts polled by Refinitiv had expected 60.9 billion. For them to grow 15% year-over-year next quarter after, pulling up 56 billion bucks, again, not bad at all. Revenue grew 13% year-over-year in this quarter. Net income, 22.29 billion. That's up 27% from last year. Last year, they brought in $17.5 billion of profit. This year, 22.29 billion in profit. So in that perspective, in the financials, the street really liked it. Now, here's the big thing. Their cloud segment, okay? 24.26 billion in revenue, up 19% and above the 23.49 billion expectation. So that intelligent cloud, that includes AI, cloud, Azure cloud, SQL servers, they acquired GitHub, etc. All of that is included in what they account for when it comes to cloud. Revenue from Azure jumped 29% during the quarter, higher than 26% that analysts expected. And at the constant currency, Azure revenue rose 28%, accelerating from 27% in the fiscal fourth quarter. The reason this is so important for a cloud is because Microsoft Azure is in a very tight battle with AWS and Google Cloud. And whoever wins the cloud wars, and obviously they're all going to win, but whoever really shines, and Azure is just absolutely dominating in cloud, is going to get a premium for years to come because AI cloud is only growing and growing and growing. There are companies every single day that are hosting some level of cloud services through AWS, Microsoft, or Google, or they're creating some type of AI startup that is going to need compute from Microsoft, OpenAI being the biggest that Microsoft owns 40% of. That's going to be valued at about 80 billion when they raise their next round of funding. So the cloud is incredibly important to Microsoft's growth. And if they can really continue to, as Dan Ives says, flex those muscles for cloud, they're going to be able to do very well. Here's Dan Ives actually talking about why the cloud revenue is doing so well for Microsoft.
$1 trillion are tied up in Microsoft and Alphabet, but each stock is heading in an opposite direction tonight. Let's dive in. Microsoft popping after the company saw cloud computing demand accelerate. So the cloud giveth to Microsoft. Stock's up 4%, but the cloud taketh from Alphabet. The Google parent lower also because of the cloud business missing some estimates. However, maybe a Sully side up, Alphabet did post its strongest overall business growth in more than a year. Still, that stock's down 6% right now. So let's jump into both and take what we're going to call a dive with Ives and bring in Wedbush's Dan Ives. Dan, I'm confused. Okay, cloud good, cloud bad. What's the difference between Microsoft and Google?
I mean, look, it's a flex the muscles moment for Microsoft because of what you see with Azure in terms of that growth rate, but also AI. They're really controlling the narrative when it comes to AI from the Dell and OpenAI. Google, you look, they're still trying to, I would say, a little bit of an uphill battle on cloud, gaining share, but investors are going to be disappointed. I think the narrative here is cloud strong, and Microsoft is sort of the trophy case here.
Yeah, kind of re-acceleration of cloud computing for Microsoft, which is good. The stock is up 4%. And I know that every time we've been on, Dan, we've been talking about AI. There's also, I think, from what the brief that I've read, so say I'm wrong if I am, this new Copilot AI product that's going to be coming out basically, I think, next week or in a couple of weeks. A lot of optimism and hope around Copilot.
Yeah, I do, Brian. I think this conference call from Microsoft, it could be the conference call of earnings season because everyone's focused on, okay, NVIDIA, who's next? Are we going to see monetization of cloud? Nadella spoke and the street listened. And I think that's really the important thing in terms of Copilot. We think this incrementally could add 15, 20 billion per year as it starts to ramp. But I think that's going to be the game changer, not just to the Microsoft story, but broader across tech. And I think for tech earnings, this was, a monumental night in terms of digital advertising, but especially in terms of cloud and AI, in terms of what Nadella saw. That's the important thing here.
Yeah, and so this is also really important again, right? Because Microsoft has an opportunity here to capitalize on the AI cloud future that Nadella, as Dan Ives says, he sees it happening very clearly. He's not confused about the direction on where this is going. And as a result of that, he wants to capitalize. We'll talk about Snapchat and Palantir in a second. Imnam says, do you think cloud might be more influenced by corporate usage rather than retail usage? Yes. I mean, cloud is really based by enterprises, right? Not every enterprise is, a Fortune 500 customer that's spending billions of dollars a year with Microsoft, but there are a lot of startups and small little companies that are spending $20,000, $30,000 every year on cloud. The majority of that revenue is coming from some of the big names that commit to very heavy contracts. And so AWS, like I remember when I was in high school and I loaded up a document from our high school website for whatever reason, I had to load up some document. And I saw at the end of that document, it said .aws blah, blah, blah. And I didn't even know what AWS was. But now I remember thinking of that, like, wow, my high school was hosting their files on Amazon's cloud. And so like Amazon was the de facto 10 years ago. And then Google and Microsoft really came in and said, how do we get in this game? Because 90% of companies are still on-prem, meaning they're not in the cloud. Most of that are going to be enterprises and commercial clients. And so that B2B business is what Microsoft's really going after. And they're absolutely dominating when it comes to the cloud. Look at their income statement. So 56 billion bucks, up 13% year over year revenue. 18.6 billion came from productivity and business services with a 54% operating margin. Those include Microsoft 365, so like Office, PowerPoint, Word, all that stuff. And then LinkedIn. LinkedIn, I think, printed about $8 billion of ads for them last year. So you could imagine LinkedIn was maybe $2-3 billion bucks this quarter. And the rest is the Office suite. But 18.6 billion bucks, just insane. A lot of people forgot Microsoft bought LinkedIn for like $22 billion back in 2016. But that is a social network that they own with them. And their cloud, 24 billion bucks. Xbox and personal computing, 13.7 billion. I even forgot they owned Xbox. Not to mention they bought Activision Blizzard, so they're going to get a crap ton of gaming revenue over the next couple of years. That starts to be another layer of growth for them. Gross profit was 40 billion. Net profit was 22 billion. And their cost of revenue was 16.3 billion. They're growing 13% year over year, just absolutely phenomenal. They're expecting 60 to 61 billion next quarter as well, off of a $56 billion quarter. It's not bad. It's not bad at all for Microsoft. I mean, they really showed that when it comes to cloud, they are not playing around in terms of trying to get that revenue. And shout out to Garcia. He tweeted this today. This is where I got this chart from him. We just went through Google's as well. Visa also had earnings. Not going to spend too much time on Visa, but if you take a look at this, they brought in $8.6 billion of revenue. The big thing for Visa, which I think was important for the entirety of the market, is Visa decided to buy back $25 billion of their stock. And so that was one of those things where it's like, all right, these companies are seriously buying back their stock and doing what they need to do. Google bought back $15.8 billion of their stock last quarter. Just insane that they spent $16 billion on their stock. So another way to financially engineer these earnings per shares and make sure they don't dilute shareholders and, kind of prop up the companies is by doing these buybacks. And Google, Microsoft, Visa, all of them being able to do it as well. Can you imagine when Palantir reports 50 billion a quarter? Yeah, that's either I'm going to be a very old man or it's going to happen soon and I'm going to be a very rich man. Well, one of those is going to happen and we'll see where it goes. Let's talk about Palantir for a little bit. We got 11 minutes into the market open. Palantir up at 1665 in the pre-markets. Let me ask a question to everybody, okay? Do you know who Susie Orman is? Do you remember who Susie Orman is by any chance? Did that just trigger a memory for you at all? Anyone get Instagram reels sent by their mom on a random Tuesday by this lady who looks like Ellen DeGeneres speaking about why you need to like max out your 401k? You guys know this lady? She is a staple in personal finance. Yeah, we have like the Graham Steffens on YouTube. She was my mom's generation's Graham Stephan. Okay. She didn't have YouTube. She had TV. So she had an actual show on television. And she was teaching personal finance, okay? Well, this is what Suze Orman had to say yesterday on CNBC's Fast Money as she was asked about the companies that she likes. Here's what she had to say.
I want to buy a stock, and I hope it goes down, and I hope it goes further down and down so I can accumulate more. Palantir is a perfect one. I started at 7, went all the way up, and I'm like, don't go up. And now I have to wait till she comes back down again, right? But so I don't have a problem when I bought a stock and I'm down with it because I buy it long term. I'm not a trader with it.
Susie Orman, folks. came out yesterday on CNBC and said, "I like Palantir." It was just incredible to see this happen. Who would have thought? Popular personal finance expert, regardless of what your opinion is of her, she has a generation of people that are loyal to her, right? You may think she's just a joke. You may think she's Dave Ramsey. You may think she doesn't know nothing about stocks. And to her credit, even if she doesn't know about individual equities, she's in the personal finance space, right? So she understands a lot of stuff about taxes and all this stuff, which is great. That's awesome for her. But she has a very captive audience and people that care about her, even if you don't care about her, right? There are people that will watch her show every day. There are people that are avid fans of her. They will share her content. And so when she recommends a company, they're going to look into it. Susie Orman has 128,000 followers on Twitter. I want to see if we could, on Instagram. I want to see Susie Orman show ratings. Could we get the historical ratings? I want to know at the peak, how much of her audience, 2002 to 2015. 2002 to 2015. So she ran the show for 13 years. I think it was syndicated on CNBC many times as well. I want to know, how much did she actually... Oh, wow. Look at this. She brought in 250,000 viewers at 9 p.m. live every day for about 15 years, at least 2014. And she was on CNBC. So has been a mainstay of CNBC schedule since 2002. It's currently the channel's highest rated show on Saturdays. On Saturdays in 2014, right? I know this is 10 years ago, but just to put it in context, 250,000 people on a Saturday, which is not easy on a Saturday. I mean, people are going out, right, on a Saturday. She got them to come and watch her live on CNBC. So that's my point. I mean, the show has been gone for the past 8 years, right? She's kind of retired from the show, but she has an audience, a legacy audience that loves this woman and loves her ideas. So when she mentions a company, they're going to look into it, regardless of if that means anything for Palantir. It was just funny to me that she mentioned that Palantir is interesting. That's my generation. I knew of her name, but not a generational influence, in my opinion. Yeah, I guess for some people she was more influential than some people she wasn't. But for her to mention Palantir was just funny, because I was just like, wow, she really mentioned Palantir. Like, out of all the companies she could have mentioned, out of every stock she could have mentioned, she mentioned, like, no one even knows what Palantir is, right? The mainstream does not know Palantir like that. And she was like, yep, Palantir, that's the company that I want to talk about. So really, really awesome to see that. In terms of earnings expectations, I'll talk about that a little bit after the market open. I've been pretty much saying what I expect for Palantir earnings, but I was actually on the phone with Adam yesterday. We were talking about it. Revenue has to come in to justify this $16, $17 price range. If revenue does not come in to justify that price range, revenue meaning above, what they're guiding for, I don't know how healthy the street is going to feel when it comes to Palantir. At this point, I am kind of convinced, even though I'm convinced in a maybe in an immature way, that the NHS deal is going to be announced on earnings, because I just kind of think that they know it's done, and Palantir is like saying, hey, we're about to work with you for the next 7 years. Can you just announce it on the day that we really need you to make an announcement, which is our earnings? But outside of that, I have no clue what's going to happen on earnings. I'll talk a little bit more specific in a while of certain numbers I'm expecting, but if we don't top revenue expectations, I don't know if this premium is justified. I do expect Palantir to make a statement as well on Israel. I don't know if they will, but they were open talking about Ukraine. I would be curious on the earnings call, do they actually make a formal statement around Israel before any analysts ask them questions about it? I'd be curious if analysts would ask, hey, do you think this is going to drive any revenue for the company? But we will see on November 2nd, which is how many? 7 days. 7 days away from Palantir being able to report these earnings. And we're going to see what they end up showing up with. All right. Snapchat. We got to talk about Snapchat as well. We got about 5 minutes into the market open. Let's get into Snapchat numbers. Snapchat was a joke yesterday. Snapchat was an absolute joke. The stock was up 24% in the pre-markets. And then the stock decided to collapse about 13% right after being up 24%. Okay. So this is what we got from Snapchat. 750 million monthly active users. 90% of the 13 to 24-year-old population is what they reach in 25 countries. And you may think, oh, that's amazing. I, as a shareholder, I'm like, that is irrelevant to me, because none of these kids have money to spend on ads. So this right here is tough for them to be able to overcome. They're hip with the new generation, but that new generation has no money, right? 406 daily million active users. So they grew last quarter from 397. So they grew DAUs about 12 million. Not bad. You can see their penetration in their global community. They say they support a bunch of languages and all that stuff is irrelevant. So to get to the numbers, as you can see, let me pull up their actual IR. It's taking them forever to show me the revenue numbers. That's what I want to see. The revenue came in at about 1.1 billion, and they tried to save the stock by authorizing a $500 million share buyback. Now, this is ridiculous because I think Snapchat has about 1.3 billion in stock-based compensation. Okay, so when you have that much in stock-based comp, putting up 500 million and we're going to buy back the stock, it's like it means nothing. It means absolutely nothing, and shareholders definitely weren't pleased by that. Revenue was 1.18 billion compared to 1.2 billion. Net loss was 368 million compared to 360 million. So they're losing more money. That hasn't changed. They haven't figured out how to be rational enough to have cost discipline to lose less money. Adjusted EBITDA was 40 million compared to 73 million. Adjusted EBITDA has gone down. Operating cash flow was 13 million compared to 56 million. Operating cash flow has gone down. Free cash flow is negative 61 million compared to positive 18 million. Free cash flow has gone down. Trailing 12 months operating cash flow was 207 million, and free cash flow was 2 million as well. So not good numbers, right? Just not good numbers. The one thing that they really showed that was very good outside of, the 5% revenue growth, at least they showed some revenue growth, is 10 million people are paying for their Snapchat Plus subscriber service, which is like this $3 a month service to be able to access exclusive content. Even with those pretty amazing numbers, I mean, they launched it, I think, 7 months ago, and they have 10 million subscribers. That is not enough to either make them profitable, increase their free cash flow, increase their operating. Like, there's nothing in there that's giving them any boost outside of top line revenue growth, which is kind of irrelevant because their cost discipline is so horrible. As you can see, Snapchat introduced a stock repurchase program of up to 500 million bucks. That also really is like, again, they don't have that much cash in the bank. So it's not like they're like, they can buy back that much stock. And even if they buy back this stock, what is the potential for this stock to go that much higher that makes you excited as a shareholder to buy back in? Evan Spiegel says, I'm deeply grateful for Jerry for the meaningful contributions he made to this community at Snap. His work on our advertising platform served our community and built a strong play, helped lay the foundation of future growth. Jeffrey Hunter, your COO, who Evan Spiegel is talking about, is retiring. So you got a company that's barely buying back any stock. You got a company that's not growing in the context of revenue. 5% year over year is not high growth tech. Your company that's still unprofitable, since 8 years after going public. And then your COO is leaving. People leave for a lot of reasons, but in a growing, thriving business that's, accessing hundreds of millions of people and like having all this impact, your COO tends to not leave because there's a lot of options they can cash out on. They can set themselves up for life and for generations to come if they just stick the course and have those, options continue to appreciate. But it doesn't look like there's that much appreciation coming for those options because it seems like the stock is in a very tough situation. So Snapchat is down. I don't know how that's going to affect Meta. We'll talk about Meta after hours. We got market open in about 30 seconds, and we'll see how Meta is going to be reacting after the market opens and do a little preview on them. But in general, the Snap numbers were just not good. And the street weirdly gave them like a 12-14% premium as soon as the market opened, as soon as the numbers came out. And then I think they digested it and they were like, it's pretty tough. It's up 6% right now, $10.35. I think obviously the street might be excited on increased daily active users, which will increase revenue growth in the future. Again, I think you're just taking a massive risk on if Snapchat is really going to be able to monetize those DAUs, because it's just not an easy thing to do given the age demographic. So if you're buying it at a $15 billion market cap where the company is not even posting a profit, that is the bet you are trying to make. All right, here we go. We are here, 9:30 a.m., October 25th, 2023. This is the first day after Microsoft and Google. We'll see what the earnings reaction is. The stock market is now open. Wake your ass up. Here we go. The stock market is once again open. Let's see what we've got going on. Snapchat up 8% on the day, $10.51. Snapchat is up. S&P 500, 421 down 0.46%. Microsoft, look at that, up 4.5%, $344, $2.56 trillion market cap. This is just a couple of billion under Apple. Apple, I think, is at 2.78. So you got Microsoft at 2.56, really competing with Apple for that top spot. Maybe they're the first to get to 3 trillion. Google is down. Google is down $128. We are seeing Google crash right here, down 8% on the day. just nasty crash on Google. There you go, folks. 8% down, $11 at 128. I think the person who's going to be buying today, Google already have 3 million shares traded within the first minute, is going to be Bill Ackman. I think he'll take a nibble today. I believe he will buy up a little because he's been very steadfast on his commitment to Google if you've seen him talk about it. So I think today or in the coming weeks, if we see more of a Google dip, that will be one institutional buyer coming in. Enphase at 93.44. Enphase down another 1.73%. There is no reason for Enphase to be down. The macro is not really declining that aggressively this morning. So I don't know why investors just keep selling Enphase stock, but they keep selling Enphase stock. We're going to have their earnings tomorrow. It seems like they're expecting all hell is going to break loose tomorrow on October 26th. So we're going to see how Enphase ends up coming out. Google down about 10%. Verizon is up 34.43. We talked about them a little bit on Finance Junkies yesterday, but they had their best performance in 15 years per their stock. Their free cash flow was up. And on top of that, they have now total 20 million subscribers on broadcast communications for internet and phone. So the fact that their subscriber growth is up and the fact that the stock is down, pretty aggressively from where its historical average is at about $48.50. That's why Verizon is showing a little bit of momentum. They're up 9%. Amazon, 125. It is down 2.71%. They're going to have earnings tomorrow. Tesla, 214. Tesla had a great reversal, and it held that reversal. Topped at 222, right now at 214, but it bottomed at 202. Pretty flat in the market open, which is what you expect to Tesla to just be kind of normal. Robinhood, $9.22. Let's check on Bitcoin. With all the heat of Google and Microsoft, I forgot Bitcoin is also a thing, and it's happening. Where is BTC? Bitcoin, 34,434. So Bitcoin pretty stable from yesterday. I think it declined a little bit to 33 in the night, but now right back up to 34. Where are the Bitcoin companies? Marathon is down a bit. Riot is down a little bit. Coinbase is up a little bit. So a lot of these companies are down because yesterday they exploded like 20, 30%. Literally in a day. Some of them were up 12, 20%, but they are down today, even though Bitcoin retains its level. Lockheed Martin continuing to go green as a defense contractor. Netflix at 413, red a little bit, but Netflix now at 413, breaking out of that 400 level. United is down, American is down, Delta is down, Nvidia 433, kind of flat for the day. NASDAQ 13,001, just $1 above that $12,000 range. TSM is down a little bit. AMD is down a little bit. Uber 43.22. Square still stuck at that $43 level as well. JP Morgan is down. Wells Fargo is down. Citigroup is down. A lot of stocks are red, not red aggressively, but they're down like 0.5%, 0.3%. And maybe it's because Google, again, kind of just shit the bed. Wow, look at that. 126 on Google. Stock was at 142 3 days ago. Now at 126. If you've been looking to get an entry point in Google, it doesn't look like this is the worst dip to get into. Now, could it get worse? 100%. But remember, the reason we're seeing them down 8% on the day, Google right now as well. Google had a $1.77 trillion market cap 4 minutes ago. Right now, it's 1.6 trillion. They lost $177 billion of market capitalization in the past 4 minutes because their cloud revenue missed by $20 million. They brought in $8.4 billion versus $8.6 billion, which is why they lost $177 billion. That is how the stock market works. You can either call that reasonable or you can call that irrational. I would be on the side of that's more irrational. That doesn't mean that this is like go balls deep into Google because it could obviously go lower, but that does mean, look, that's a pretty aggressive decline in market capitalization because of a $20 million, what amounts to a rounding error of a miss. Now, yes, is the growth slowing down in cloud? Correct. But you got to be kind of, not in the loop to not know where AI spend and cloud spend is growing. And if you listen to the earnings call, where their AI infrastructure is going and how many companies across the entire world are going to be using them, Microsoft and Amazon and their cloud business, it's not slowing down anytime soon. So we're seeing a pretty nasty decline in Google there. And it's up to you to decide if that's a dip worth buying or not. Snapchat at $10, up 4% on the day. Google 128, KRE Regional Banking Fund $38. Palantir 1641 down 1.5%. They did release a new partnership video with Ferrari yesterday. I covered it on the channel. I thought it was an interesting video because they saw how they're bringing AIP and LLMs into Ferrari. They've historically worked with Ferrari on time series forecasting. Now they're working with Ferrari on vehicle testing, and they're using AI and machine learning to actually figure out how to ingest the data. They've mentioned hundreds of terabytes of data to be able to meaningfully extract results from it in the context of Ferrari. So we saw a pretty good partnership video with them yesterday. S&P 500 at 420.89. Let's check on the 10-year. 10-year treasury yield in the United States of America right now is returning us, I think, about 4.8. Correct. 4.9. So we're inching higher. Makes sense. Equity's going a little bit lower, 10-year inching higher. And Brent oil gas prices are down 3% this week at $88 on the day. So we got oil down, 10 years up. Equities are down slightly. Google and Microsoft did well. Google needed to do really well to get the market excited. Google did not do really well. And that's why Microsoft is up, but Google is not up as well. Let's talk about PayPal. We got to talk about that. Art W says 125 was my Google target. Well, looks like you got there. So for those that wanted the 120s for Google, they are indeed getting a little bit of an opportunity there. PayPal is down pretty badly this morning as well. For those that own this stock, it's down another 2%. And I'm going to explain exactly why it's down 2% in a second. But it's just funny to see. Well, never mind. It's down 3.6%. I made a mistake. PayPal is down more than what I expected. And the reason it's down is because of something going on with a competitor with Adyen. If you guys remember what Adyen is, it's an international competitor in regards to the fintech space. Let me pull up the exact tweet from what we're seeing right here. There was a new report that came out on Adyen, and that's what's causing PayPal to also be down today. And basically, where they're showing weakness in that fintech space on them from an international perspective, which is why we're ultimately seeing PayPal get a little bit of a haircut today. Now, one of the things that's interesting going on with PayPal, I'm going to pull this up in a second, is that the fintech space in general has been, seeing a lot of damage. And because we're seeing that damage in the fintech space, PayPal being the biggest fintech user, or being one of the biggest fintech companies, is getting, one could argue, disproportionately affected, seeing them come down. PayPal, a new 52-week low at $52.14, market cap of $57 billion. One of the interesting things about PayPal, even at this new 52-week low, they're $2 away from getting down to that $50 level, is they still have $1.9 billion to spend in regards to share buybacks. Google bought back $15 billion of their shares yesterday. Microsoft bought back shares. Visa authorized $25 billion of share buybacks. So PayPal still has, even Enphase has $1 billion left to buy back shares. PayPal has $1.9 billion, $2 billion for them to be able to spend on their stock. And it doesn't seem like they've done that yet, or maybe they have, and we're going to find out in Q3 on earnings, I think on November 2nd, if they ended up doing that. If they did end up doing that, then, and the stock is still down, then that kind of sucks, because even buying at these levels, it's not enough to get the stock to go back up. But if they didn't, that means there's an opportunity, because PayPal likely has a little bit lower to go. And as a result of that, there's going to be some benefit in the context to PayPal stock. Now, here's the main news on Adyen. They're going through not only a couple of legal battles, I'm trying to pull up the exact article, but they're going through some problems in their transaction margins as well. And so that's why we're seeing some volatility here on PayPal. I'm going to pull up the correct article in a second, but the reason PayPal is down another 2% today is because Adyen, another fintech competitor from the Netherlands, is getting hammered because of legal battles and some issues with their transaction margins. And that's why the market's thinking PayPal is getting affected. It's very similar, quite frankly, to what's going on with Enphase and SolarEdge. SolarEdge showed bad guidance. Enphase took a crap. And so we're seeing that a little bit with PayPal here today. Amit, what do you think about the Powell speech happening tomorrow? Do you think it could crash the market? I think the Powell speech is happening today. I think after Meta earnings, Meta reports at 4 p.m. and then Powell speaks at 4:30, if I'm not wrong. I don't know what he's going to say. I mean, look, what do we expect him to say that's different from what he said over the past couple of weeks? He said pretty much the exact same thing, that he's happy with that inflation's coming down, but we might have to be higher for longer, and the consumer is very resilient. And if the consumer is very resilient, then Powell says the economy is growing faster. And if the economy is growing faster, then that's bad, because inflation is not going to come down as much. Now, even though we saw PayPal go down today, and even though Jay Powell thinks the economy is growing very fast, you had one guy a couple of days ago say, actually, I think the economy is growing slower. And that guy is Mr. Bill Ackman. Bill Ackman ended up saying, look, we're covering our bond short because we think that the economy is growing slower. And so we're not short any bonds anymore. The reason he thought bonds were going to go higher, which is why he was shorting bonds, was because he thought the economy was growing fast. If he thought the economy was growing fast, that means interest rates were going to go up, which is why he was short on bonds. Well, if interest rates are not going to go up, not only because of geopolitical instability, which I'm sure influenced Bill Ackman's decision, but on top of that, you think the economy is growing slower. If the economy is growing slower, meaning there's more disinflation and, there's not going to be that much top line GDP growth, that means the Fed's going to have to cut those rates, which will cause bond yields to go down. Why will the Fed have to cut those rates? Because if the economy is slowing down, something is breaking internally in the economy, even if it's not some cataclysmic recession that's breaking the economy. And that means the Fed's going to have to stimulate the economy a little bit, or at least lower interest rates, because you don't need to have that tight of a cycle. Google, by the way, now down 9%, just absolutely insane reaction. You don't need to have that tight of an economy if the economy is slowing down. So as a result of that, Bill Ackman said, yep, we're going to cover our shorts. So you got Bill Ackman covering his shorts on bonds because he thinks bond yields are going to come down, which is, again, he thought bond yields were going to go up. That's why he was shorting those bonds, because he thinks the economy is slowing down, because Jay Powell will cut interest rates. If Jay Powell does that, I think the economy writ large or some stocks are going to do very well. And so today in his speech or tomorrow, whenever he's speaking, I don't think he's going to say anything different other than the fact that he thinks the consumer is strong. And if the consumer is strong, even though the economy is slowing down, that's going to be that dicey situation of, okay, is the consumer strong enough to stop a slowing economy from continuing to have higher interest rates for longer? And I think that'll be the battle of 2024 to end up seeing what happens. What we have Google, goodness gracious, 9.6%. They've lost $190 billion of market cap. Look, you know what I think this is a really reaction for, Google being down 125? I think this has nothing to do with cloud. I think what this is a real reaction for is the fact that the valuation was getting a little bit too much for Wall Street. I think that's why Google is down. You cannot tell me a $20 million risk on cloud revenue is enough to tank a stock $200 billion in market cap. I think the market was thinking, you know what, Google, you're getting close to $2 trillion. We kind of don't like that you're getting that high. You're trading at a 28 times PE. If you don't absolutely kill it on every single metric, it's going to be impossible for us to justify giving you a basically $2 trillion valuation. It was at 1.77 before the decline. So I think this has way more to do with valuation than cloud revenue growth, because there's nothing existential. There's no structural problem in a business division of a larger company. If you miss something by 20 million, that's a rounding error. That is not, it's not something to be it's not an existential threat. This is not a ChatGPT moment in the cloud for Google. And as you can see, ChatGPT has zero impact on Google. They grew search advertising 11% year over year at $44 billion. People are searching and they're clicking on ads. So I don't know, man. I think this is a dip that's exciting. Kite says we need a 10 PE on every stock now. Yeah, we need a PayPal PE on every stock at this point. So this is just, it's aggressive, absolutely aggressive. Oh, I'm sorry, 200 million miss. 200 million miss. I calculated wrong. Not a $200 billion market cap decline. 200 million, which is still aggressive to be down that much. But yeah, not 200 billion. I'm sorry, I was reading it wrong. So they went from 1.77 trillion to 1.59 trillion. So a $20 million miss resulted in 10x the amount of market capitalization decline in terms of $200 million down. But we will see, where Google goes from there. You guys say math isn't that hard. I told you guys I suck in math, and not only I suck in math, my mom was a math teacher, which is the sad part about my mistakes in math. It's like sometimes like yesterday when I calculated really quickly how much a stock was down from the percentage or the cents, and I did it in like 2 seconds, and I was right. I was really proud of myself. But on many days, I will make that mistake. People are making fun of it on Twitter. They're like, Amit thinks a 1x is like 1,000% gain on a stock. And I was like, so is a 10x like a 10 trillion % gain? Is that how the math works? But yeah, it's not the best at some of this math, even though my mom was a math teacher, which is very weird. Can't do options, but I just bought 3x leveraged Google longs. You're probably being sarcastic there, but if you did, then maybe those will end up turning out good because you're buying them at a very cheap price. Google at 126, down 9%. Bitcoin at 34,000. Microsoft up 3.7% on the day. Microsoft gaining on their market cap, $2.55 trillion. Spotify 166. They're down on the day. They were up 10% yesterday. Palantir is down 2%. S&P 500 down 419. Let's get a little bit more analysis on Google and Microsoft and where the market thinks it's growing or going. And then we'll do Meta previews because we do have Meta to discuss. They are reporting after hours today at 4 p.m. So we will talk about Meta. All right, Google and AI. Let's get some updates on them.
Alphabet
and Microsoft earnings. Let's bring in Fast Money friend Gene Munster of Deepwater Asset Management. Gene, good to see you. Is Microsoft's quarter as good as a stock pop? Is Alphabet's quarter as bad as a stock decline?
Well, I'll start with Google. I think investors should just take a deep breath. We put a lot of pressure on that Google Cloud number. The deceleration, understand that that's caught people's attention from 28% to 23%, while Azure had that step up in growth from 26 to 29%. But the deep breath piece of this is just looking at the aggregate of what is in front of Google over the next decade. They essentially are losing share in cloud right now, in part because of Microsoft is optimizing OpenAI on Azure. And so they are gaining usage because of that. Google's answer to OpenAI is their new Gemini platform. That is, Sundar was talking about it on the call here the past 35 minutes, and that's their new, essentially, that's their answer to OpenAI. As that gets integrated, it'll start in the December quarter, and further new models, they said, will be announced in 2024. Microsoft will announce new models too. But I think that this scale will tip back towards Google, or more level playing field between Google and Azure, and we'll see a reacceleration. But most importantly, the reason why I think investors should ultimately view what's going on at Google as positive is they are investing more, but they're doing it judiciously. They are saying that Ruth Porat is saying that they're going to grow earnings faster than expenses. And if this plays out in terms of how search is going to be impacted by AI, we're just at the very beginning of this. And I just want to fill in the final thought here, Melissa, in terms of why search is important relative to AI, is what Google wants to do is take what you use Google for today, that is for information, navigation, and commerce, and add on to that basically generative features. And so as they add that, you're going to go to Google more over time, and there's more opportunities for them to monetize search. And so big picture here.
I agree. Search and generative AI is not going anywhere. Again, the street doesn't like cloud, but search is doing absolutely fine.
The Google story is intact. I haven't even talked about Microsoft because I'm just so surprised at Google's reaction here.
So that was last night. Obviously, today, Gene Munster, he is a fund manager that has a crap ton of Google. I actually want to see if we can look up his holdings real quick. And we'll see what he has. But the big thing for him on Google, I'm sure he would be surprised today it's down 10%, is that search, generative AI, advertising, all that stuff, the core pillars of the business are intact, and they're doing phenomenally well. That cloud revenue missed by 20 million, which he even says, Google has an answer for it in terms of the Gemini platform. That is what's causing the decline. And it's simply a question now of how bad the market wants to give a dip in the context of missing on that cloud revenue. Google is heavily reliant on search. Yeah, I agree. Look, if you invest in Google, you have to believe in the future of advertising and search. You cannot, you cannot, like, if you're afraid that Google is too reliant on search and like that's the only part of their moat, you can't invest in Google, because you're right. That is the only part of their moat. I mean, I know they have a lot of components, but it's a big part of the moat is that they own the search market. If that ever goes away, Google's done. And in March, everyone thought that was going away. People thought, there was an existential crisis for Google. Like, search is just not going to be the same. That's not the case. Google's great. Google's amazing. Google's doing, search advertising is absolutely phenomenal. Search is winning. It seems like it's thriving. Most people don't even know what ChatGPT is. Like, ask your mom, your mom's friend. They don't know it, right? They use Google. So that was not an existential threat for the business. This cloud stuff, to me, is not an existential threat, but it is definitely something that the market's not happy about. And so we're going to see some short-term volatility, which is fine if you're long Google, because if you're long Google, there's probably a lot of alpha to be picked up in the meantime, especially when interest rates come lower, as they will hopefully over the next year. Why is Palantir down? Because of Smitty's comment. NHS still hasn't announced. That's why Palantir's down. No, Palantir's down because the whole market's down. So we're seeing S&P 500 decline almost 1% now at 419. S&P 500 was 425 yesterday. Now it's 419. We're seeing that down. Palantir down 2% at 1630. Google down 8.9% today at 126. Absolutely insane. Absolutely down. Okay, let's talk about Meta, because they're reporting today. They're going to determine a lot of what happens in the market today. Meta. So let's watch this video first, and then we'll keep going from there. What the street is expecting from Meta and where they want to go. Actually, hold on. Let me pull up. Yeah. Here we go. So, this is what I wanted to see. This is a comparison of Google and Meta. And then we're going to talk about the fact that Meta is getting sued by 30 states right now for some of the advertising they've done with kids. So let's take a look at this and then we'll keep going on Meta.
Now to break down the results is Rohit Kulkarni, Roth MKM Managing Director. Rohit, welcome. So, I mean, even though any dangers you see on the expense line, there had been some concerns about how much Meta was spending on the metaverse, but investors seem to have turned away from that lately.
There are still concerns on the margin when it comes to how much more are they willing to spend on the metaverse. That gap or the width of how wide the dispersion is from the spend expectations is wide. That makes me a little bit worried. So, which essentially means that somebody is going to be disappointed tomorrow. People who are expecting at the low end versus high end, somebody is going to be disappointed. So that's the hair on the stock right now. On the bottom line, about 24 expectations. But the top line, I feel Meta is the fastest growing ad company right now in this ecosystem, and that's what they're going to prove tomorrow.
So then would you be buying Meta here on the dip?
Yes, absolutely. I think Meta is the cheapest, most free cash flow generating mega cap, and probably the fastest growing mega cap right now, and that's why we would be buying.
So, Rohit, how do
Okay, so one of the things that's important to understand when they're talking about Meta is Snapchat saw some decreased ad spend a little bit on Snapchat. We really don't think that's going to affect Meta. Google's ad spend was fine, so Meta should be fine. Street's expecting about $31 to $32 billion in revenue, so that's going to be important for Meta to be able to bring up. And the biggest thing they're trying to see is not only how much cost cutting they're doing throughout the entire organization, but most importantly, how much cost cutting are you doing in the Metaverse Reality Labs division? That brought in about $300 million of revenue last quarter. We'll see if that grows to like $350, $400 million of revenue. But Meta Reality Labs, they've lost $50 billion. That's $50 billion in the past couple of years on that metaverse with Reality Labs. So with Reality Labs starting to not show too much sign of potential because the metaverse is kind of not a thing anymore, I think investors really want to see, all right, Mark, we let you spend $50 billion on this little fun project you had. If imagine Meta didn't focus on the metaverse. Imagine they said, look, we're a social media company. We're just going to keep growing our ads. Like Google. Google's not trying to be everything. Google's like, hey, we sell ads. Remember Mark Zuckerberg in Congress, senator, we sell ads. Google, we sell ads. That's it. That's all they want to be. Mark had this whole vision of like, no, we are like this transformative company around the verse of the Meta. And like, and we changed the name to Meta. If they had just not done that, $50 billion would be back and saved in their bank accounts, in their on their income statements, because they wouldn't have spent it on the metaverse, which means that maybe they would have even captured more share in the digital ad market. And so you would imagine what I think Meta would easily be close to that $1 trillion level right now at $800 billion. But they tried to diversify, and as a result of that, I think investors will be expecting a little bit of Reality Labs and a decline in the operating income, or the operating expenses they're having on trying to make Reality Labs a thing. On top of that, you got Frances Haugen, who was the whistleblower that thinks Facebook is the most evil company in the world. This is her take on 42 states that are suing Meta for their advertising practices. I don't think this is a headwind for the stock, but it's definitely not good perception given, as we see, the public perception on Meta has changed. Everyone used to hate the company, and now I think less people hate the company. People think Zuck is like a rock star. People used to think he was evil. So we'll see what she has to say about how states are approaching Meta right now.
Knows a thing or two about Facebook and Meta. She was the main source for the Wall Street Journal's 2021 series, claiming Meta was indifferent to the harm that was being caused by its platforms in this big multi-state lawsuit, citing some of the documents she provided to the Journal as evidence. Joining us now is Frances Haugen. She is former Meta employee and advocate for accountability and transparency in social media. Frances, thank you for coming on. What is your take on this 42-state lawsuit?
Today is a historic day. Most people don't track things like how often do attorney generals come together to press on a single issue. But bringing together over 40 attorney generals, I think it's like 41 or 42 all in, to push on a single issue, particularly involving kids, this doesn't happen very often. You know, it's been over 30 years since they came together to fight tobacco. And I think it's a symbol of the fact that enough is enough, that people aren't willing to wait anymore and endanger any more children or their futures.
I know you testified over 2 years ago now, hard to believe, and some powerful stuff coming out of that, Frances. Refresh our memory for those that maybe did not see it. Why did you decide to come forward. What specifically did you see happening inside the corporate walls that made you say, I'm going to take a professional and possibly personal risk and do this?
For me, the personal reasons were that I saw over and over again, Facebook was prioritizing its own profits over public safety. The issue that was closest to my heart was around content moderation and linguistic equity. They said the way to make these products safe was after the fact to take down dangerous content. But they didn't tell us that you have to retranslate those systems language by language by language. Over the last 2 years, my understanding of the broader set of issues has grown as I've talked to researchers, parents, healthcare professionals about how critical and timely the issue of children's mental health, though, is in the United States. And so I'd say today, I wish I'd asked even more questions when I was there, because the public deserves to know what's happening to our children and to make sure that we're keeping them safe for now and the future.
And Facebook will say that they don't put profits over safety. They will say that some of the issues that you brought forward maybe are misrepresented. And they will say that they are putting forth tools, more than 30 of them, to make sure that kids, particularly those under 13, are not able to access either the apps themselves or some of those features. How would you respond to how Facebook would push back?
Well, one of the facts that was pointed out in today's suit that was filed was Facebook never asked, or excuse me, Instagram never asked any of its users how old they were, which is like, this is the very, very bare minimum you need to do in order to say we're keeping kids off these platforms. Till 2019, they didn't even go back and say, hey, and even then it was only for new users. They didn't actually go back and ask all the users, hey, can you just tell us your age? Until right before the first story dropped in the Facebook files, 2 years ago. They were asked for comment, and then they went and asked for these kids' ages. Facebook has acted in bad faith over and over again and basically done the bare minimum. If we look at a lot of the features that they usually point to for why they're taking such a stand for children, the vast majority of those features launched on the same day in the summer of 2021 when the United Kingdom passed the age-appropriate design code. Facebook didn't prioritize kid safety because they wanted to. They didn't go out and say, we're going to quest instruction. They did it because a country said, we demand higher standards for our kids, and everyone else in the world got those benefits as well.
Okay, so to push back a little on Mrs. Haugen, I think, and first of all, I want to know in the chat who agrees with her. Who agrees with her little campaign that she's running on Facebook? I think, I don't know, man. I wonder what she thinks about Twitter, because you're talking about content moderation. You're talking about kids. You're talking about all this stuff. On Twitter, we can literally see people being killed because of free speech, right? Elon Musk is not censoring anything. I mean, you can see, and you could say that's net bad for society, but we're seeing a lot of stuff because in the name of free speech. So it's not like there's not a role for content moderation, but I would wonder how she would think about Twitter if she's thinking about Meta in this aggressive of a way. I don't know. I don't agree with her at all, quite frankly, because look, Facebook is not responsible for kids. Parents are responsible for kids. If you're a parent and your kid is using Facebook and they're finding all these issues, you get them off Facebook, especially if they're under 18. Like, what? Even if Instagram asked, hey, how old are you? The kid would lie anyway, right? So to me, I think a lot of this rests on the reliability of the parent. You don't blame the company for offering a product or service that the kid ends up using. Like, if you're a parent, you better block some websites, like adult websites, from your kid's browser, because you don't even want them to step on those websites, right? Because that's not a good thing. So in the context of Facebook, I would say the same thing. Don't let them go on Facebook. Don't let them create an Instagram. If you're allowing them to create these things and engage in social media and be exposed to all this stuff, they're going to be exposed to the real world. Social media is not always the most fun place. There's a lot of shit that goes on when you got billions of people, posting whatever they want. On top of that, I don't know if necessarily Meta is a net negative on the world, given all the positives they've done for small businesses in regards to search advertising. So if her big campaign is like teenage girls are depressed, I think there's a deeper reason for why teenage girls are depressed than Facebook. And if it is because of Instagram, then maybe society itself needs to have a cultural shift outside of Instagram models, which, by the way, there are swimsuit models on regular, television and magazines before there was an Instagram that made people feel self-conscious. For that to be the reason, I don't know, man. That's tough for me. That's tough. Shamin says, parenting? You're asking too much. Yeah, I mean, look, it's tough. By that logic, there's no regulations involved for kids. Parents can be responsible for everything. I'm not saying there's no regulation for kids. I'm just saying that on a social media app or the internet, like, it's up to the parent. It's not up to how is Facebook supposed to manage a website for 3 billion people? They're already dealing with everything in the world. Now they got to manage making sure kids aren't depressed, which was her big thing. Remember when she came out with the whistleblower stuff, her big thing was teenage girls are being depressed because of the effects of scrolling through posts on Instagram. Zucks can't say this publicly, but I can. I don't think he gives a fuck. I don't think he cares about teenage girls being depressed, quite frankly. I really don't think he cares. Because at the end of the day, he has a responsibility to shareholders. And if those teenage girls are being depressed scrolling through Instagram posts of models that have unattainable bodies they can't get, guess what? When they look at magazines and TV commercials, they will also feel depressed looking at Maybelline and Sephora commercials of pretty faces and jawlines that they will never be able to access. So I think Zucks would be like, well, if they're going to be depressed, I'd rather be them depressed on Instagram scrolling through ads. Now, he can't say that, but I can. So at the end of the day, this idea that like teenage girls and like people have like this negative aspect to social media, that's a deeper problem in society. That has nothing to do with Facebook. I don't think, if you think Facebook can solve that, if you think user-generated content can be moderated in a way to make teenage girls not feel like they need to live up to some body standard, then you should probably get rid of Kim Kardashian, because she has been accentuating Eurocentric body standards and unreal bodies for the past 15 years. But no one says anything to Kim Kardashian, right? We applaud her as this like amazing female billionaire. I applaud her as an awesome, superstar entrepreneur. I just think it's crazy to put the blame on Facebook. Absolutely crazy to put the blame on Facebook. Based. Bro, it's ridiculous. It's absolutely insane. Like this is we're living in what I saw yesterday, guys? This is what I saw. I want to get your guys' thoughts on this. Meta now at 306. I saw someone share a post saying, boycott these companies because they support Israel. And the companies were all the chocolate brands you can imagine. Starbucks, Lululemon. Let me see if I can bring up that post right now. I saw it on Instagram yesterday. And I saw the person who shared it. And I was just like, you're sharing this post off an iPhone made in China. Okay, yeah, McDonald's. They say ban McDonald's because they offered free meals to hospitals and the Israeli Defense Force. Ban Starbucks because they showed some disdain for someone who tweeted that they like Palestine. Disney gave $2 million to Israel, so ban Disney. Ban Maybelline. Ban Dove, the soap. Ban Kit Kats. You can't eat Kit Kats anymore because they've supported Israel. I'm just like, are we insane as a society? Are we actually insane for us to think that we can't eat fries because McDonald's gave some meals to a hospital in Israel? Like, that's literally what the post is saying. It's just like, this is loony. This is just incredible. This is insane. And so I think this is the same thing when we say Meta is, this unethical company stopping teenage girls. Like, no, it's not Meta's fault. That's the easiest scapegoat we can have in society. That's my opinion, right? And there's obviously a conflicting perspective, but it's the easiest scapegoat to say that company is why teenage girls are depressed versus, hey, maybe as a society, we need to have different ways we parent our teenage girls, because then when they go on Instagram, they won't feel that depressed. I have a lot of friends who are girls who are like 20, 24, right? I grew up with them in college, really good friends that I had, and they're not that self-conscious because they're for lack of a word, boss ass bitches. They're killing it. They're in corporate America. They're doing their shit. They're living life, right? They don't feel depressed because they see some body from Kim Kardashian that they can't achieve, because they have their own self-worth. And if you don't have self-worth, then a lot of that stuff can be depressing, but I don't think we can blame Facebook for that. SoFi at $7.15, ARM at $51, Instacart at $26, inching higher from $24, Microsoft at $343, S&P 500 below the 200-day moving average at $419, Coinbase at $81, Google $126.93, PayPal $51.82. PayPal is $1.80 away from going below $50, which is absolutely insane. So if we see that decline on PayPal, it's going to be aggressive for some of these PayPal shareholders. Robinhood, where we got Robinhood, $9.16. It's a red day in the market. It's not as red as it was a couple of days ago because of the nice green we had yesterday, but yesterday was very green. Today is mildly red, with Microsoft being kind of that sole company, along with Snapchat. Snapchat's up 3%. Microsoft's up 3%. And Bitcoin continues to be green at 34,402. Palantir at 1642. I think let's end it off with a couple of Palantir expectations. people were asking me for that. So I'll give my expectations on Palantir. I will continue to give them before November 2nd, but I'll give a couple of expectations and then we'll end it out for today and be done for this earnings. Couple of questions. Imnop says, if you don't like the company views, don't use their product. I agree. I don't think like 42 states suing them is the right way to. And remember, a lot of those states, if they get an easy settlement, Meta has billions of dollars, right? So those states know, hey, if we can get some millions from Meta, like it's very easy to just sue them and have them settled because they don't want to go to court and then move on from there. Warren says, you're mad that businesses have the right to choose who they do business with. Yeah, it's like modern American capitalism is starting to really deteriorate when I see posts like that. I'm just like, you're tweeting that off of an iPhone that's made in China, off of slave labor, and you're saying, oh, boycott Starbucks. I'm just like, this is just, I cannot believe the hypocrisy, the lack of, the unrecognizing of privilege that we have in the Western world to not realize how we're engaging in the world and then how we're saying to ban the products that are making that engaging possible for us because they gave French fries to the Israeli Defense Forces. Just absolutely insane. Okay, Palantir expectations. Let's talk about that real quick. Palantir, so 1637 right now. Revenue expectations is 556. The street expects $556 million in revenue. I think there's going to be a couple catalysts for Palantir. Number one, either the NHS deal is announced on earnings, and then we're going to see Palantir have some momentum there. That'll be a big deal. I think it'll be announced in earnings, but I could be wrong at this point. So we'll see what happens on earnings. Number two, I don't think they're going to meet revenue expectations that broadly. I think they're going to come in at around 557, 558 million, which is on the high side of their expectations, but it's not beating to the point where we need them to beat. So it's probably going to be 14% year-over-year growth. Share buybacks, I don't think they bought back the stock, but I wouldn't be surprised if they spent 20% of that billion, so 200 million on some share buybacks. We'll see if they come out with some share buybacks on November 2nd and if they bought any of the stock. I really don't think they did because I don't think any of these prices are appropriate. I think like 11, 12 is where they want to buy, but we'll see if they bought. And then GAAP profitability, that's going to happen. So we're going to get GAAP profitability. We're going to get maybe some share buybacks, probably not a ton. NHS is a wild card. Revenue growth is going to come in line at 14%. And then the biggest thing for me is AIP client growth. If we see massive acceleration of AIP client growth, upwards of 50% month over month, and Alex Karp is like, yo, we're really growing client growth. You need to seriously consider this. That will be a good earnings for Palantir, even if we get a decline in the stock price because the market wants to see increased revenue growth. So as a result of that, I think Palantir is not going to have the worst earnings, but this premium at 16, 17 bucks, I don't know if that revenue growth comes in lower than expected if we continue to maintain that. That is my biggest concern for Palantir. $14 is very easy to touch again if that revenue growth comes in bad or flat. And so that's going to be, I think, the biggest question going into November 2nd on earnings. But if we get a catalyst like an NHS or something, that could really pump up the stock and keep it good as well. Thoughts on Amazon tomorrow? I think Amazon's going to kill it. The problem with Amazon is that they're under FTC investigation right now. They're at 124 bucks. They were at 105 about 4 months ago. So they're up nicely from them, but they're down from 140. Their retail e-commerce business has never shown real margins. As soon as they start showing some margins, we're going to see some, hopefully, real incremental growth when it comes to Amazon's business. But that retail business just has not shown a ton of margins. And once they turn on the spigot for those margins on retail, it's going to be fine. But I think cloud's going to kill it. I think advertising is going to kill it. Probably going to be at like 40, 45 billion TTM. But I don't know if the stock's going to necessarily kill it as a result of that. SoFi at $7.10. We're 10 cents away from seeing $6 on SoFi. SoFi is absolutely getting wrecked today, down 3.73%. Again, some fintech news came out that's affecting the entire sector, which is why PayPal is down, Adyen is down, SoFi is down. A lot of these companies are really getting wrecked today because of that overall fintech news. I looked at my portfolio today. I am down $8,002.15. So a great way for Wednesday morning to begin. But we are seeing a lot of volatility there. But I worked in the defense industry. The amount of money they waste is unbelievable, so I never invested. Yeah, that's fair. And I think Lockheed Martin and Raytheon will get some more money from these contracts with everything going on in Israel, but there definitely is a lot of waste in the defense space. SoFi is dropping hard. Yeah, we'll see if it goes under 7. We'll see if that's support. I don't know. SoFi at 7.11. I haven't seen, this is a new low in the past 4 months. I mean, since June, I don't think we've seen $7.11. We got through that $6 range and now we're here at 7.11. So SoFi, we will have to see how it ends up going react. So last thing, S&P 500. Verizon's also down 1.3%. They had a great day yesterday and they're down, so they're giving up some of those gains. A lot of these companies, Google just, I think Google's the reason for a lot of these companies falling down, but a lot of it also is that 10-year inching back higher towards 5%. S&P 500 right now at $419.54. The 10-year, I want to get an update on that real quick. I think we're at 4.9 on that right now. Yeah, 4.91. That's a reason for why we're down today. If that inches towards higher to 5%, we're going to see it decline even more today. And that's why we're down. MNOP is down 16K. Yep. People, I would imagine people are down today. Is Bitcoin still outperforming your stocks? Yeah, my Bitcoin is up 70%, 79%. Now I have 0.0001 penny of Bitcoin. So I am up on it. I shared that on Twitter, which is why if you're not following me on Twitter, Twitter's in the description. You've got to follow me on Twitter. You will see posts of me being up 80% on my Bitcoin. It's just not the most in terms of actual gains. All right, word of the day. And then we are out for today. Word of the day. Oh, this is an interesting one. Sanguivorous.
Sanguivorous.
Sanguivorous. Feeding on blood as a bat or insect. Interesting. Vampire legends often depict mythical creatures that are both immortal and sanguivorous. This is a fun one coming up next to Halloween, where we got blood and vampires and ghosts, right? It's a very Halloween word. The surgeon skillfully removed a leech from the patient's arm, a sanguivorous creature seeking a blood meal.
Sanguivorous.
Sanguivorous. This is an interesting one. If you ever are bleeding or something and you're next to someone, you should use this word. You should be like, oh wow, it feels like there's an insect that's being how do you say it again?
Sanguivorous.
Sanguivorous on my arm or something. Sanguivorous. No one will know what this means. No one will know what sanguivorous means. Feeding on blood. So obviously the bears are being sanguivorous right now, feeding on the blood of the stock market. A lot of red we're seeing right here. Meta down another 1.43%. Palantir at 1631 down 1.95%. The bears are being sanguivorous today, but hopefully the bulls will eventually not be sanguivorous over the long term, since we won't have to eat on blood and we will be able to swim in our gains, hopefully in the long term. Did you sell the $25 of Bitcoin I gave you in July? I have to check, Philip. I might have on my Cash App because I just cashed out a bunch of stuff, so that might have happened. If I was, then that 25 might be like $27 or something right now, right? Or no, it might be more. It might be like $30. So we will see when that ends up happening. Birthday is October 27th. So I will be 26 in 2 days, which is kind of crazy, but I will be 26. Tomorrow, after the market open, I'm hopping on a flight to Vegas. And Friday, I will be live from Las Vegas, Nevada, 5:45 a.m. for the market open. The market open is not stopping. The show is not stopping. The show must go on. So Friday morning, 5:45 a.m. It'll be a new early morning version of me to be here at 8:45 a.m. Eastern. We'll see how with jet lag. If I don't have to sleep, I don't have to sleep, but we're going to do it. I'll see if I can get Chris to be in the market open. He might be really tired, but live from an Airbnb in Las Vegas, Nevada, market open will happen on Friday. And hopefully we'll have some green equities on that Friday morning and keep going from there. All right. That's it. Appreciate everybody. Thanks for being here. We'll be back on Finance Junkies tonight to break down Meta earnings and keep going from there. Google is down. Microsoft's down. Palantir's down 1631. We will see where the market goes. S&P 500 at 419 down 1% officially on the day, and Palantir at 1630 down 2%. That's it for me. Thank you, everybody. Have a great one, and I will see you tonight on Finance Junkies and again tomorrow on the market open. Have a good Wednesday, everybody. Good night.